Investing in cryptocurrency can be an exciting way to diversify your portfolio, but it also comes with significant risk due to the volatility of the market. So before diving in, it's essential to understand the basics of blockchain technology and the various types of cryptocurrencies available, such as Bitcoin, Ethereum, and many others. So start by setting clear investment goals. Are you looking to make some short-term profits, or do you prefer a long-term investment strategy? This will influence your choice of assets and trading approach. It's also important to assess your risk tolerance, as cryptocurrency prices can fluctuate widely within short periods. One common strategy is to buy and hold, where you purchase a cryptocurrency and you keep it in a secure wallet, hoping that its value will increase over time. Alternatively, active traders might choose to buy and sell based on market trends, although this requires a deeper understanding of the market analysis and may involve more time and effort. All right, so security is critical when investing in crypto. Use reputable exchanges, enable two-factor authentication, and consider storing your assets in a hardware wallet to protect against hacks. Okay, now give me a second. Diversifying your holdings across multiple cryptocurrencies and different types of digital assets can help mitigate risk. Now, as with many investments, approach cryptocurrency with caution, okay? Staying informed about the market changes and regulatory developments. Let me know if this helped.